The Nasdaq has been on the green the entire week this week. Many blue chip tech stocks were also hitting all-time high again and again. It really demands people to wonder, when is this going to burst? After all, there were around 50,000 virus cases per day in the past few days. Many businesses are also closing up once again, but none of these seem to matter this week, as it's July 4th and everybody's happy. So virus number moved to the side until next week at least, when the party is over. So to prepare for next week, let's recap what the retail investors such as you and I were buying and selling this week. Stay tuned and don't go away. Hey, welcome back to another weekly episode of The Crazy Market. Make sure you click the like icon and subscribe to this channel if you have not done so already, as I go through weekly topics ranging from personal finance to investment, and I typically upload 2 to 3 videos a week. So here we go. Let's take a quick recap of what stocks people are dumping this week and what's my take on these. So there you go. The top 5 stocks all have one thing in common, and that is their price movement. These are apparently pump and dump stocks. They all had some massive rally at the beginning and quickly died off, and here we are watching people selling them off. If you own any of these, it's time to let them go to preserve your capital. And we also have 2 energy ETFs here. If you hold them, expect them to be volatile. Energy stocks tend to fall in the past couple years. So even though the stocks rallied and fell in a cyclical pattern, it's best not to hold them for too long. Find a good chance to let them go. And we also have one interesting story here. That's Office Depot. It recently had a reverse stock split from 10 to 1. And any stocks that is not in a multiple of 10 will be sold off. And that contributed to the selling numbers. Generally speaking, a reverse stock split is not a good sign. It happens a lot when a 2 or 3 digit price stock fell to a low single digit. And that's what happened to Office Depot. Having a reverse split may make the stock price look more attractive to investors. But looking at the price history of Office Depot, I'm afraid it may soon be a new victim to e-commerce. Here we also have Aurora Cannabis. The whole wheat stock rush all pretty much ended in 2018 and 2019. If you really want to hold on to a wheat stock, go and get Alfaria instead. They have a much stronger balance sheet. And of course, we have Hertz. About a week ago, a company announced that they will be taking over all the vehicles from Hertz. Also on Thursday morning, its rival, Avis, received an upgrade from Morgan Stanley, attributing to its strong sales of second-hand vehicles. And this benefited Hertz as well. So you should try to find an opportunity to sell off your Hertz stocks as soon as possible before all the steam goes away. Okay, so that's the briefing for the top 10 stocks retail investors are selling this week. And now let's turn our eyes to the top 10 stocks retail investors are buying this week. We're gonna start off with Apple at number 10. Actually, let's not. I'm tired of talking about Apple already. What can I say? A great stock to own. Buy it the next time the price dips. At number 9 is Lemonade, an IPO stock just released on Thursday, with an initial price of $29 and closing the day at $69, jumped more than double. But realistically, retail investors could only get it at around $50 at the earliest, since the first dip is usually reserved for institutional investors and their high net worth clients. Don't get mad at me, I know, the rich has more opportunity, right? Anyway, Lemonade is an online home insurance provider. Buyers can just buy a home insurance with a few clicks in the app. The company has also received financial support from SoftBank. Expect the price to come down a little on Monday, but the business model is great. It's definitely a buy for me. Next at number 8 is Facebook. Hey, wait a second, isn't Facebook facing lots of backlash right now as we speak? Yes, and that was why the stocks went down so much at the beginning of the week. Retail investors were seizing the opportunity to get their hands on Facebook. But the price stock has climbed back up since, and looks like the opportunity is now gone. The stock was climbing this week, even more and more companies are pulling out from advertising on Facebook. So looks like the backlash is already old news and not relevant anymore. But do keep in mind that right now, all these companies that pulled out account for around 10% of last year's revenue. If this number keeps going on, then you may see another dip for you to enter a long position with Facebook. I'm not a big fan of Facebook stock myself, as the younger generations are gearing away from Facebook, so I generally don't have a really far-looking optimism with the company. I made a separate video talking about Facebook, feel free to go check it out. Next is Beyond Meat. Nothing too crazy here. The company just signed a new deal with China and gonna be selling its products in China's grocery stores. Hey, if you can enter China's market, your company is gonna expand like crazy. So good for the company. I think it's a buy for this stock. Next at number 5 is Boeing. The company has finally made some progress towards the recertification of its 737 MAX series. The test flights started on Monday and lasted for 3 days. More data analysis will be conducted and performed in the coming days and weeks, but you can expect the 737 MAX to be flying once again. If you want to piggyback ride the momentum of Boeing, consider getting Southwest and Ryanair, as these airlines are heavy users of the 737s and they have lots of MAXs in order. Alright, at number 6 is Pfizer. Now, I'm sure you have probably heard it by now that they have just made a huge leap in the COVID vaccine development. So that's also one of the reasons why the market was quite optimistic this week. But just be reminded that the vaccine won't be ready until at least end of this year or beginning of next year. So that doesn't mean you should go out and party just yet. But this piece of news is enough to ignite the stock market, at least for a little this week, along with the increase in employment rate released on Thursday. Anyway, the stock Pfizer is still pretty affordable, with a PE ratio of only around 12. That is considered cheap nowadays, so it's a definitely buy for me. Next is the most expensive stock, Amazon. It hits its all-time high on Wednesday, and I thought it wouldn't have the gas to climb even higher. And then on Thursday morning, it jumped another 2.7% at its opening. Good that it has fallen back a little since, otherwise it wouldn't be too healthy for the stock. As always, wait for dips to get into blue chip stocks like Amazon and Apple. You never know which day it decides to take a rest. And it's good that many brokers allow you to buy fractional shares, so you don't have to pay like almost $3,000 for this one stock. If you have a $300, find an opportunity to get into it. Oh, and you want to know what's the price to earning ratio for Amazon? It's freaking 138. But don't look at the fundamentals for companies like Amazon. Fundamentals don't matter to tech companies, and apparently to Tesla also, which is sitting at number 3 this week. Did you see the rally on Thursday? It jumped like 9% in one day. It was already a $1,000 stock, and yet here we are, staring at its $1,200 price tag. Tesla is now the largest car maker in the world in terms of market capitalization, meaning the stock value in the market. All because it reported a better than expected car sales in second quarter. Tesla closed down its factory for 2 months during the lockdown in the United States, but only a week or 2 in China. And a huge proportion of its sales comes from China alone. So if you own Tesla stock, you really have China to thank for. Tesla does not even have a PE ratio because it didn't even make any profit last year. That's why I was saying the fundamentals don't really matter to mega cap companies such as Amazon, Apple or Tesla. It's the far future people are investing right now. So in this coming week, look for dips to enter your position. It's a buy for me. The final 2 are speculative stocks, and they are Workhorse and Plug Power, which had massive rally only recently. They are not as bad as those I mentioned in the selling stocks earlier though, as these companies actually had some history in the past. But what I'm not comfortable is the hype-up market valuation in a very short period of time. If you look at the chart, you will understand. If you have spare cash and actually want to invest in highly speculative stocks, then I think these 2 are indeed the better ones out there. I don't know how should I feel about this, but sure, go buy them. But only with cash you are prepared for anything to happen. The final thing I want to touch on is a stock that I will buy this week for swing trading, and that is Square. Stocks do go up and down and sometimes going against the market, and that is what happened to Square. For the past few months, we have seen how strong Square was, beating the Nasdaq every single time and reaching all-time high on Wednesday like many other stocks. But it pulled back on Thursday, along with many big names out there too. The main question you should ask when facing such situation is whether there is any volume going on with the stock or not. If the company is traditionally a blue chip stock in its own industry, then you can count on it to recover in a relatively short time. Square is the payment leader in small and medium-sized retail business. In case you don't realize, cashless payment is the future. Many small businesses will start adopting to this new technological change, and this pandemic has created this reason for this revolution. Square has so much potential ahead, and it's just starting. Take advantage of this dip, and you may see more on Monday, as Nasdaq was too high on the week closing. I can see a correction is coming soon, and Square will see another dip because of that, or maybe not. But anyway, it is still a stock that you should keep an eye on for this coming week. Alright, so tell me which one is your stock of the week. Leave it down in the comment section below. And if you think this video has provided you some useful information, then please click on the like button and subscribe to this channel. With that said, thank you so much for watching to the end, and I'll see you in the next video. Peace out.